There has been a study by JP Morgan, I think, with the stoppage of flow of oil uh, from the Gulf, the impact is starting to hit like Africa, or it's already started hitting Africa already, but then Europe is gonna start feeling it by mid-April, and Asia, some parts of Asia as well, and that's why um, this conflict cannot go for much longer, because the impact would be one, increase in oil prices, and we've already seen that in some countries the gas prices have almost doubled. Two, this will even increase the cost of productions and the disruption to the supply chains. Three, the damage to the oil installations in the Gulf would take some time for it to be repaired. Assume that a ceasefire or permanent ceasefire is reached now between Iran, US and Israel. These oil facilities would take time to go back to rebuild its capacity again and be able to produce. So we're talking about between 3 months to 5 years for badly damaged installations like in Ras Laffan, for example, as it's being estimated. So the consequences will be suffered even after the ceasefire. So this will basically have an impact on increasing inflation rates by around 1% for globally. And basically, then when we look at the individual GCC countries, Kuwait and Qatar will suffer much worse than the rest of GCC. And it's the IMF has estimated that we're going to have a negative growth of around 7%. Qatar will have a negative growth of around 6%. Saudi probably, I don't know, 2 or 3%. Oman will have probably a positive 4%, down from 4.2 for 2026. So the rebuilding effort means that more borrowings is expected to take place. We already have a wall of repayments for bond repayments during 2026 of around $85 billion. Add to that, basically, the unexpected war-related expenses from basically having sufficient supplies, security-related expenses, and so on and so forth. So we're going to see huge, basically, well, I would not say huge. We're going to be a lot of bond issues coming to the market, or sovereign issues for the GCC countries to help in bridging the deficit gap in their budgets. Yes, oil prices have gone up, but the GCC countries, or many GCC countries, were unable to take advantage of that price increase because they are not able to produce. And namely, that's Kuwait, Qatar, and Iraq, for example. And yes, Saudi Arabia were able to redirect its production through Yanbu, Western region. UAE probably were able to export from Fujairah on the Arabian Sea, but that's it. So very, very, very negative consequences as a result of this war.